I think regardless of whether you're somebody who is constantly reviewing what's going on in the economy or not, the chances are that there's rumors out there about this upcoming recession. So, really economic conditions are determined by a broad range of factors. So, rather than taking the time to go into each of them in depth, what I want to do is just kind of sum up some of what the experts are saying and also how they're talking about what history has to teach us. So, according to a chief financial analyst over at Bankrate, 2/3 of economists right now are forecasting this recession in 2023. So, as this potential recession chances grow, you're probably wondering what it's actually going to mean for the housing market. Well, at least that's what I'm very interested in and sharing with you guys. So, here's a look at some of the historical data to show what happened in real estate during the previous recessions and hopefully help prove why you shouldn't necessarily be afraid of a recession and what that would actually mean for the housing market. So, a recession doesn't actually mean that prices are going to fall. To show that home prices don't fall every time there's a recession, it helps to turn to their historical data. So, there's going to be a graph here, and it illustrates that if you're looking at recessions going all the way back to 1980, home prices appreciated in 4 of the last 6 of them. So historically, when the economy slows down, it doesn't mean home values will always fall. Doesn't mean they won't, but it doesn't mean they always fall either. So most people remember the housing crisis of 2008 because that's so recent. And they think about another recession and another repeat of that housing event that we happened just that many years ago. So today's housing market isn't about to crash because the fundamentals are different in this market than they were in 2008. At least that's what a lot of experts are predicting. So home prices will vary by market and they will go up or down depending on the local area. But the average of their 2023 forecast shows that prices will net neutral nationwide. Not necessarily drastically fall like they did in 2008. Now, remember, this is all what the experts are saying. There's no bulletproof know-all, but a recession means falling mortgage rates. That is what experts are also saying. Research has helped them paint a picture of how a recession could impact the cost of financing a home. If you take a look at the graph, historically, each time the economy has slowed down, mortgage rates have decreased. So Fortune actually explains that mortgage rates typically fall during an economic slowdown. So over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak seen during the recession. And in many cases, they continue to fall after the fact as it came, there were some times for everything to turn around and the recession to actually technically be over. So in 2023, market experts say that mortgage rates were likely stabilized right below the peak that we saw last year. That's because mortgage rates tend to respond to inflation, and early signs show that inflation is starting to cool, at least as we're seeing it now. So if inflation continues to ease, rates may fall a bit more, but the days of the 3% are likely behind us at this point. So I think the big takeaway here is to not buy into all the fear when you hear the word recession and when it comes to housing. We do not want to assume that means that real estate prices are going to tank. Okay. So the bottom line, while history doesn't always repeat itself, we can always learn from the past. According to the historical data, in most recessions, home values have appreciated and mortgage rates have declined, at least from what we've seen. But again, I think 2008 is very much right in our heads. So if you're thinking about buying or selling a home this year, let's connect. Just get a little bit of advice on what we see in your local market and what that might mean for you and your home. Hope you have a good one.